All right. Let's see. Okay, great. We already have some people on. We're a minute early here. Welcome. Happy New Year to everybody, and thanks for joining us today. Excited to go through this. We'll just give people a minute or two to join, and then we'll get going. All right, I know it's 1 o'clock. We'll just give people another minute or two, but thanks everyone for joining, and we'll get going in 1 second here. Looks like the number of attendees is still going up a bit here. All right. Well, I'll start the introduction, and folks can begin. So, first of all, my name is Josh Hollander. I am one of the co-founders of the InsurTech Association. And thanks everyone for making the time to join us today for our session entitled "The AI-Ready Insurance Business: How Legacy and AI-Native Players Compete on Talent, Tech, and Capital." And we're lucky to have our guest, Joe Zuck, who is an operating partner at Altamont Capital Partners. Welcome, Joe. Thanks for joining us today.
Thanks, Josh. Appreciate the opportunity.
Yeah, absolutely. So just quickly before we begin, and while some more people are joining, I'd like to provide a quick intro to the InsurTech Association for those who aren't members already, and also share some of our new initiatives for 2026. So ITA is a trusted community where innovators across the insurance ecosystem come to learn, share, and lead. We bring together operators, innovators, and capital to navigate the next era of insurance and risk. And we do it with year-round programming that's designed for people to actually have to ship outcomes and not just talk about them. So, we're looking to help people make connections. We have a lot of people involved in the founding of the organization who have tremendous industry experience in different areas of the business. We've been doing a lot of work in the current environment around regulatory issues, and in particular, the impact of AI on some of the regulatory issues and how regulators and government are approaching it. And then collaborative working groups. So, obviously this is a complex industry, many lines of business, many steps in the value chain. And so trying to connect people across that big matrix in ways where they can collaborate and get value. KT, you can go ahead. Thanks. So who joins ITA? Anyone from early stage through established insurtech companies, traditional insurers and MGAs, investors, both at the professional level and angel level, agents and brokers on the distribution side, as well as vendors and consultants who may be working with the various people along the value chain. And then we also have some great partners in terms of other organizations that are trying to provide value and resources to the industry. KT, go ahead. So we're fortunate to have some great founding sponsors from our initial year as an organization, and continue to add more as we head here into 2026. Some of the things we have coming for this year include a new website that should be launched later this month. We'll be providing member spotlights, highlighting members and showing what they do and also what we're looking for and who they're looking to connect with. We've done a number of networking events, primarily piggybacking on some of the larger conferences, but we're going to have some new ways for live connection, starting with some salon dinners, smaller events in different local markets of 10 to 12 people that are curated conversations, structured matchmaking. So we've been building a pool of advisors who are senior folks in the industry who are willing to make themselves available for those who may have questions or specific, domain-specific areas they need help with. But we're also just trying to facilitate general one-to-one connection amongst members and sponsors. We're looking to build more membership on the carrier side as well. And then we have something that actually has been working for several months now that's called our InsurTech Growth Network, which is actually a mechanism to enable startups that are looking to raise angel funding to connect with angel investors. It is not an angel fund, but it is a way, again, for founders to be able to pitch and angels with domain expertise to be able to consider investments in those businesses. KT, go ahead. So we'll go over this again, but the website's insurtechassociation.org. You can email us at info@insurtechassociation.org, and please keep an eye out for the new website shortly. Thanks, KT. That's great. So on to today's session, which sits in one of the tracks we're developing for this year, which is our AI and operating model track. And that's a deliberate decision. Most of the AI conversation in insurance is still too abstract. Tools, demos, hype cycles, etc. So today we're really looking at how AI changes the operating system of an insurance business, where it creates leverage, where it doesn't, and what that means for strategy, talent, and capital. And so a lot of folks have looked at AI ready as a vendor decision, but it's not. It's an operating model decision. The winners won't be the teams that adopt the most tools. They'll be the teams that rewire work across distribution, underwriting, and service. So AI and humans are designed to collaborate at scale. So we're going to talk about a few things today, such as, can legacy businesses incorporate AI and compete with AI native players? Where does AI actually work in real organizations today? And how are regulation and capital reacting? And while those questions might sound simple, they're not. They force trade-offs: build versus buy, governance versus speed, centralization versus local autonomy, and what capabilities you really need to own versus rent. And so to help us cut through the noise, our guest is Joe Zuck. And Joe is one of the rare profiles in this market who can speak credibly across the operator and investor line. He's worked deep inside insurance businesses and alongside capital across MGAs, carriers, reinsurance, and platform plays, where the constraints are real and the scoreboard is measurable. He's been in the seat on corporate development and strategy, growth and operating decisions, and in the market with capacity and counterparties. Sees how value shifts when distribution gets more efficient, when underwriting decisioning improves, and when service operations get redesigned. Those are the levers that determine who wins. Joe's currently an operating partner at Altamont Capital Partners, where he focuses on corporate and business development across portfolio companies in the P&C insurance vertical. Joe previously served as managing director of corporate development strategy at Orchid Underwriters and as a board manager at Atlas General Holdings, where he helped drive organic growth and corporate development initiatives. Early in his career, he spent over a decade as a reinsurance broker and underwriter across treaty and facultative P&C markets. Brings a clear view of how value shifts across insurance business models and what it takes for leaders to translate AI into real operating leverage across distribution, underwriting, and service. Welcome, Joe.
Thanks, Josh. Really appreciate it again. And that was a really kind intro.
Well, you are, I would say, a bit of a unicorn in the space and have a great reputation. So we're certainly excited to have you here to share some of your thoughts. So why don't we jump into it, maybe a bit from a big picture view in terms of, where value is shifting in AI era insurance, and how do you see it shifting across MGAs, carriers, reinsurers, on the distribution side, and then obviously the InsurTech place?
That's a really good question. Through a couple different areas. I mean, I think, the excitement is starting to, settle down now into, actual pragmatic use cases, right? And so a lot of folks were just saying, hey, let's slap on over the last 2 years AI or, GPTs or LLMs, right? I think LLMs are becoming much more the commodity now. And, what's going to be really essential here is data, right? And, first on, I think the legacy approach has been AI is kind of bolted on after the fact here, and then you see a little bit of incremental efficiency and value, but you kind of start to hit an integration ceiling pretty quickly. um, More folks now are starting to evolve and say, okay, how do we start to replace some of our processes or procedures to become more AI native, and design that more inside the workflow. I had a very interesting conversation with a firm out of the UK this morning. It was really I would classify as AI native, right, from end to end. So not only is it the underwriting workbench, but their policy admin system, billing, and so forth. Quite impressive. Um, and where this is going, in my view, is it's less what we used to call a couple of years ago swivel chair work. Fewer handoffs, shorter cycle times, and more actually allowing the human capital to focus more on exceptions, portfolio, and really the creative elements, which AI can't or hasn't yet replaced, at least to the best of my knowledge,
Yeah,
until we get to AGI. But anyway, we'll put that to a side. So
right.
I certainly see that on holistically on the workflow, whether, and that's agnostic, whether it's insurance services or balance sheet businesses.
And just digging back a little bit into um, the legacy side of things. I think sometimes, putting aside insurance, when new technologies come to play, you'll see organizations almost like pull up a parallel tech stack and sort of build that, and then eventually figure out where to port over to sort of their new world. Like, can companies do that with AI in a legacy world of insurance? Or how are you seeing people actually trying to implement, besides just doing some of the things on the margin that you mentioned?
Yeah, no, it's a good question. I mean, I think the advantage that legacy players have, right, and it's a very, very strong incumbency, right, in terms of distribution, regulatory relationships, decades upon decades of data. Where the more innovative AI, native or AI first companies have is obviously speed, lower technical debt, and don't have to kind of fight that institutional inertia that a lot of the legacy players have. I think the question is, how do they actually start to insert, right? And I've seen the simplest, lowest hanging fruit is the back office automation, right? Whether that's the upfront claims triage, first notice of loss, whether it's document extraction. I like to say it's just kind of getting organized, right? How do you get your day organized? How do you get an underwriter organized? Use another like relevant uh, talk to a specialty E&S carrier the other day, right? That was really starting to use AI to automatically go back to the broker and request missing pieces of information so that they could have better underwriting submissions to actually underwrite in response time. And what they were telling me was that they were getting their brokers kind of habitually trained here, to improve the quality of the submissions before they got it. But reversely, or conversely, I should say, they were responding and quoting quicker, right? Which is what a lot of brokers want, right? On the services side. Um, we've also seen through some of our portfolio companies just incredible uplift in terms of underwriting guidelines, and the ability to kind of ingest underwriting guidelines and really be able to start to see, where there's potential gaps, where things can be improved, and where there might be a real latent exposure, right, or a missing piece of the underwriting guidelines that wasn't previously seen by a human underwriter. So those are just kind of two relevant use cases where I would say, quote unquote, legacy players have really adopted and applied AI correctly.
So from the insurtech side, just based on our membership, I think we will have people here who sort of are the MGA types, and then we have folks who are kind of the enabler types, trying to provide solutions to different players in the ecosystem. And presuming that folks are leveraging AI, do you have recommendations, or are you seeing ways that certain companies are particularly successful at engaging with some of these carriers, or showing them how they can add value and helping them on kind of this AI path in some way?
Yeah, I don't like to name specific firms, right? Because I never, but a few ones that I've seen kind of has been, really, well, and
you don't necessarily have to get into names,
yeah,
but what it is that gets
yeah.
them.
So I give you one good example was worked with an AI insurtech, right? That developed their own foundational models. And one of the neat things they did on the claim side was really start to identify two critical things in adjuster notes, right? Both sentiment analysis, right? Was the insured angry when they, put in the first notice of loss, right? What were some of the key words? And then the adjuster notes, and analyzing that both historically and then proactively to identify keywords that tended to cause some of those claims to go more quickly into litigation than others. What that really then translated into was like to the adjuster, hey, we should move more quickly, move this to the top of the pile and try to settle this claim more quickly before it gets into litigation and ends up costing that much more additional dollars. There was real value, right, brought there by that vendor. The other one that we've seen recently is a vendor that has done a great job in doing post-bind policy auditing, right? And saying, hey, this was the agreed policy forms, these are the agreed endorsements, and then juxtaposing that against the underwriting guidelines and the quote. And saying, actually, hey, we're missing a critical endorsement in this policy form that was issued out, right? And then it's become somewhat of a robot in terms of doing ongoing file audits, right? And so, the traditional way has been a carrier's gone and done an audit, right? Once, twice a year, maybe, sometimes every other year, scarily. And then having this going on, you're catching things where far more quickly where, a critical endorsement, was inadvertently messed up or lost or not included. Happens many times, as I'm sure many people on this call have been with policy admin systems or just human error. And, that is almost an incalculable level of what that could potentially, save in terms of future claims.
Yeah. And so I'm curious because I was at a networking thing a month or so ago, and someone from a very large carrier, tier one carrier, was talking about their decision to build something because they felt that the data it would access and some of the other proprietary information it would access was just too close to home, that they could work with a third party. And I'm just curious in general, in terms of the build versus buy decision, how you're seeing it evolve these days, or how you advise your portfolio companies on these sorts of things.
Sure. I mean, I think there's a decision tree there, right, Josh? I mean, if it's kind of core infrastructure or fairly commoditized capability, to me, that's always a buy, right? So document processing, right? OCR, data ingestion. I think a lot of that, there's certainly some folks out there getting really good at that, right? And that to me is something, why would you go and build that yourself, right? However, if it starts to touch your kind of core differentiation, right, your mousetrap, whether that's more on the service side, or something about your data, right, it's proprietary, right? I mean, just Progressive comes to mind as somebody who's just probably the best in auto, right, or is the best in auto. There is probably where building makes a lot of sense. And there's also kind of collaboration. What we've seen with some of our portfolio companies and some of our insurtech partners and vendors that we've worked with is, maybe there's buy and build, right? Where you're not necessarily building from scratch, but you're using a base and, fine tuning maybe, a model or foundational model on your data, right? Developing your own prompts and workflows, or your, eval, right? Your evaluation of a risk. There could be that kind of where you're building the proprietary application layer, but the model layer comes from a vendor, right? That base. I think a lot of it really has to be introspective in terms of, okay, why do we have our customers today, right? What is the core proprietary stuff, partly of our business? That's where you should probably put the investment in terms of building, and then the rest. I mean, I would not go try to build my own LLM. I think there's plenty of great
Yeah.
options out there
It-
today.
Is it any different, sort of build versus buy related to AI versus any other technology?
It's a good question. I don't think so, right? And it's not like, hey, this is a permanent decision. I mean, I use one of our portfolio companies. We went through a long journey, right? Of oh, do we go build it ourselves, right? And fits and starts on that. I would say no less than 3 times. And then looked at buying, right? As well. And then ultimately reversed and said, you know what? It wasn't buying wasn't the right approach because it didn't suit our needs. And building, we didn't have the right people. And ultimately said, hey, we've got to get the right people and go build this ourselves. And it's going to take a little bit longer. And that's that kind of brings out something else in terms of, we didn't actually know what we were trying to accomplish really in terms of the build. And so, I always say, like, outlining the objectives from the upfront. What are you trying to solve? What do you have in terms of your data? And then in making sure, hey, I've got the right people, and that's what I'm going to build. That's what I'm going to go buy. I think it applies to not just AI, but any technology decision.
Yeah. So just putting on your, investor hat now, are there particular, you mentioned a couple of different examples of things that caught your attention, but are there any general signals you look for in any sort of AI era insurance business
Sure.
that kind of whet your appetite to dig in further?
Yeah, I mean, for me, it goes down to distribution is one of the key things. I think, hey, how do you increase the speed? It feels, at least to me, the world moves faster every every year, every month, every week, right? And I think in our world today, speed and being able to deliver a service efficiently and consistently really matters. So when we look at something from an investment standpoint, I think it goes down to a couple different things. One was obviously distribution, right? Being able to reduce work, compress time, and deliver either a response, a service, or a quote, or whatever it may be. That's one lever. Two is certainly underwriting, right? If it's on the balance sheet or on the underwriting services side. For us, I think it's table stakes that that they're a profitable and consistent underwriter, and to the extent that they're starting to use AI to augment their underwriting. And I think, I purposely use that word, not replace, because I strongly believe that there's a human contextual element that isn't going away anytime soon. And then the last piece is, it's not necessarily somebody who has, fancy AI demo, or a lot of it, what we've seen turned out to be vaporware. It was great on a demo, and then scratching behind the surface, the code just really wasn't there, or it couldn't actually, there was quite a bit of human in the loop. So I think seeing firms that can actually take a workflow, improve on it, and show something where, again, I go back to my comments earlier in this discussion, something about their business is proprietary, unique, and they're using AI to improve that or augment, that really sings well to the investing community.
So just putting that last comment you made, the last element to the side, because I think everybody understands that. But as part of your diligence process now, has AI readiness, whatever that might mean, has that become a part of the diligence process now?
Good question. What does AI readiness mean? Do they have a subscription to ChatGPT or Anthropic or something like that? Right? Okay. Maybe everybody does, but it is something. It's less about, I would say, AI readiness, but are they AI conversant, right? Do they understand at least where the world is going in terms of AI? Are they thinking about it? Are they starting to integrate it? Are they actually going from pilot to production, and making it part of their core ethos? And that doesn't mean that they're just throwing caution to the wind and saying, "Hey, we're going to just AI everything," and try to use it as an expense rationalization or something like that. It's very much, is this part of their core business today, right? In terms of, are they thinking about it? Do they have a data leader? Do they have a technology leader that is AI conversant? And then how are they thinking about it improving their business going forward? To me, that really defines quote unquote AI readiness.
Yeah. What about the regulatory aspect of AI and the regulatory frameworks that are either existing or proposed? And
it's a great question, right? I mean, to me, I think there's a lot of look. I think first and foremost, there's latent AI exposure that we're probably all wearing in terms of risk takers or balance sheet businesses in certain ways, right? That will manifest in years to come. Just my personal view. But in terms of regulation, right, it's super confusing, right? On the federal level, I think you've got, trying to enforce, a state mandate that, no state can mandate their own AI regulations. At the same time, I was listening to a podcast over the holiday break about it. There's the absolutists, there's, the folks that are really afraid. I would say, listening to a lot of experts and seeing, just playing around enough with LLMs and models and so forth, we don't quite, and even the experts of like OpenAI and Anthropic and Gemini and Google and so forth don't quite understand just how much is going on in what I say these black boxes. I do fall on the side that I think there is going to be some regulation. Unfortunately, like everything, it will probably start as a patchwork quilt where you get states and localities doing it. You're going to have a whole separate thing in the EU, and I'm sure the UK versus the US. And then, you look at China and the Eastern countries. It's something that I think everybody needs to be cognizant of and navigate. And then there's a whole, ethical consideration. But you could totally see AI having biases that start, reintroducing redlining, right? And all sorts of real challenges. Obviously everybody defaults to the negative, but as well as the positive as well, right? And does that start to disrupt portfolio theory in terms of underwriting and so forth? I mean, there's a lot of rabbit holes we could go down on this, Josh, but I do think, like, as of now, what I'm seeing, excuse my light, as of now, is that, I think the EU has tried to do a few things. The US from the federal levels, like, try to put an executive order, and then you've got a couple states, to my, like, New York, California, Colorado, right, putting a few acts together, but I'm not aware that there's much that's been practically implemented yet.
So recognizing there's a lot of moving parts, do you have any advice for anyone in terms of how to position an AI strategy so it sort of reassures people rather than scares people?
Yeah, I mean, sure, from the regulatory aspect, is that what you're asking?
Well, regulatory, from an investment perspective, capacity.
Yeah, I mean, I think from a regulatory basis, well, yeah, we'll go regulatory and investment and then use. From a regulatory, I think it's just having your legal team, risk teams, just being cognizant and understanding, hey, do we have indemnification from our insurance policies on what we're doing? How are we using third-party data? How are we using customer data? Are we checking ourselves right in terms of what exposures are we taking on? What are exposures are we maybe not, or inadvertently covering? And if AI causes harm, who pays, right? On that, I think is just the natural, and then it extends to vendors, right? And your own, governance internally and so forth. From an investor standpoint, with AI, go back to, we look at, how conversant is the team? What is their strategy, both actual use today, but also going forward? And then the practical, what I would say is, what are your kind of key workflows? Do you have your foundational fundamental data, done and correct, right? That's the most important thing before you run off into your AI journey. And then, who is kind of starting to really lead to go from pilot to production, who's tracking, tracing the use of AI, right? And then, how are we kind of testing, right, to biases, discrimination? What are guardrails with vendors? What are guardrails with third-party data, our own data, so forth? Just having that thinking and that framework built before you start running into an AI journey, I think is paramount.
Has anything changed in the way you look at operating discipline or risk posture or governance in an organization?
Yeah, no, it's a really good question. I think what we think about is a few things. One, who owns and controls the data, right? Two, where is this all stored is another big thing. And then, what permissions do folks have, both internally and externally, vendor wise? And, go back to the regulatory, is there defensibility, right? If you're starting to use AI to actually make underwriting claims decisions, certainly in jurisdictions that may be a little more or less friendly than others, e.g. California or New York, or if you're operating in the UK or EU. I think those are things that we're all very cognizant of. But I'm sure there's a number of things that, as we all go through this journey, that we'll learn ourselves as well.
So just one thing I want to say to folks listening. Oh, there we go. Someone just popped up a question. I was going to say, we are going to save some time for Q&A, but if you have questions you'd like to put in now, maybe we do that. Joe, would you want to take a question now, or you want?
I'm happy to take a question, however you want to. Yeah, however you want to go.
So question is, do you expect AI to shift market share toward incumbents with scale or toward agile MGAs and insurtechs?
Ooh, really good question. You know, I think about this a little bit too, quite a bit actually, and I'm sure like you, right? And others on the line here. The power of marketing and the power of incumbency is really, really strong. And you know, I I'm not in the camp that say like, the big, I'll just say like Travelers and Liberty and, State Farm and Farmers, right? Just or Nationwide or Progressive, right?
Yeah.
Are all that far behind that some of these more, nimbler AI startups think they are, right? They're actually pretty good, right? They're actually pretty good. And, they have incredible power of marketing, right? I think it's often written about Geico and, Berkshire's marketing budget behind that. And I think that is tough to overcome over time. That being said, where are some of the more nimbler startups going to win? I think they're going to win in more of the kind of frontier technology, frontier industries that are going to come and win on service, right? And can erode market share over time, right? Especially as they become more responsive. I think driverless cars are a great example, right, of that, or rideshare, right? And other more sharing platforms where some of the legacy players have really, really struggled with that, right? And I think if somebody can come up with a unique mousetrap to use AI, navigate the regulatory complexes, and demonstrate that to risk capital over time, you could see a significant portion of the auto market, won by somebody who's new to the scene, right?
Do you find that the technology, um, like there's certain niches where investors don't want to play because the market opportunity is too small? And I'm just curious, do you find that the technology makes you maybe consider investments that you wouldn't have otherwise because maybe people can underwrite more profitably because of the technology or the ability to analyze data in ways they couldn't previously?
Um, yeah, I would say, at least from my perspective, right, and even more broadly, addressable market share and scalability matters, right? You can have, there's a lot of opportunity in niches, but from an investability standpoint, unless you were aggregating several niches or a repeatable process that applied to like a number of affinity or association opportunities, um, I think it's hard to get too excited about something that is just too small of a market from a larger investor standpoint.
Yeah. Okay. I'd like to segue a little bit into the talent side. And at the highest level, what kind of leadership profiles are you looking for these days? And has that changed at all with the evolution of
Sure.
technology?
Yeah. So I mean, what we're looking for now is I think individuals and talent that can bridge both business context and technology capability. I use my analogy of like a Rosetta Stone, right? Is I probably don't need PhDs, but I do need folks that can translate both the practical business context and the insurance application, and be at least conversant enough in the technology. Not asking them, suddenly to become vibe coders or cloud coders, but at least understand the technology and not be afraid of it. I've come across companies in our industry that have absolutely banned everything, even to Copilot, and they're the absolutely afraid of it. I don't think those companies are going to be long for this world over the next 5, 7, 10 years here. So in terms of talent, that's what we look for, and folks that are open to adoption, but they do need to have the core fundamentals down of the business.
Do you see any trends in terms of differences in talent needs for MGAs, carriers, insurtechs, or areas where they're overlapping and competing for talent?
Yeah. So from the InsurTech standpoint, I think we still see quite a few folks that are, either biased more towards the technology side that are feeling their way through insurance. And, it often takes a little while before they recognize that they need to bring in, some tried and true, legacy insurance talent
Right.
for a number of reasons. One, to understand the regulatory, to understand the risk capital, product program development side, or to understand, how the business works, right, in terms of distribution and still the importance of relationships and that credibility, right? On the flip side, from if I take more of the legacy side, what we're still seeing is not quite appreciating the cost of the talent that is commanded on the technology side, and really to kind of get best in class talent there to really drive outcomes. It's not inexpensive, right? And finding good young talented people and getting them enthusiastic about the insurance industry remains a challenge. I think it's a strongly a marketing issue for insurance. I've been a big advocate of trying to recruit younger talent into our industry for a long time here. I think it's an infinitely fascinating industry that touches every element of the economy and frankly is the oxygen of the economy. However, we don't do a good job of marketing or selling ourselves, to technologists or young people or others, and what the art of the possible is. Probably a
Yeah.
long-winded way of answering your question, Josh.
Now, uh, do you see any differences in sort of the talent sequencing and what key hires to make when,
Yeah,
both on the legacy side and on the InsurTech side?
good question. On the InsurTech side, I'm starting to see more of a recognition of bringing in that insurance knowledge a little bit more quickly, and certainly on the distribution, element, right? That relationship element still matters immensely. On the legacy side, it's still tough sledding, right? In terms of really understanding what the investment is needed, getting, whether I don't know if we still use the term data scientists anymore, right? And folks that understand, how to take a foundational data centric approach, um, and what that investment entails, and in addition to bringing on folks that can be those Rosetta Stones internally as well. That's a whole nother kind of layer. Some folks are like, oh, I'll just hire a CTO and a couple tech guys, and it's like, well, what's your real strategy behind it, right? And are you hiring the right people that understand the business, and are they open to understanding insurance, and do you have a few folks that straddle those lines of having worked in insurance before as well, right? Because if you just bring in kind of folks that have never touched insurance, the learning curve can be steep, right? There's a lot of
Yeah.
terms and terminology we use and acronyms that it's a whole nother language.
What's your, you mentioned like where's the data house, and before when we were talking about the risks and things like that, but what's your view of, having consulting relationships versus full-time, hires, either to, solve specific
Yeah.
problems, to get from one gate to the next because, maybe they're the right person to solve this problem, but aren't the right person to solve problems 2, 3, 4 down the road.
No, I'm a big fan of bringing in consultants, especially if you're trying to solve specific problems, and whether it's somebody who's very strong on the distribution side or whether it's somebody who's strong with a fundamental foundational data side, right? How do you build your data lake? And how do you maybe think about your claim strategy? Um, you know, Generalists that have touched everything are hard, really hard to find. But there's a lot of great specialists and a lot of great consulting talent out there. And I think the two things you really need are having a strong orchestrator, that can manage those consultants and actually manage to go from, pilot to production and work with a vendor and work with your internal team, and making sure your internal team doesn't feel threatened either, right? That they can be the biggest impediment to improvement, right? I call it the institutional inertia. But that's where I kind of gravitate towards.
So I'll ask just one last question, and then we'll leave some time for questions. But I guess it's just more, you gave some examples along the way in this discussion, but anything, whether it's on the distribution side, underwriting and risk selection, ops, claims side, or loss control, any other examples you've seen that are particularly interesting, or areas that you think are ripe for, with opportunity right now?
Yeah, I mean, I'm actually kind of interested in more what we can do with images and vision. I think curiously, I haven't seen a lot, and maybe I just haven't come across it yet. A lot of folks spending more time with the visual and what that can translate in terms of AI. I think that's going to be an area that's going to be immensely powerful. I think the other thing that I often talk about is, what is that quote unquote kind of Trojan horse of, proprietary data capture that a firm can get, and how do they apply that, and are able to kind of elicit that to give them an outsized edge in terms of selling or product creation. And then I go back to claims, and maybe it's just topical for us. But spent a lot of time in seeing, like, a lot of folks focus on the property side of claims, right, which is maybe the lower hanging fruit, and yeah, it's big, but I think there's so much still to be done in commercial casualty claims, and seeing more folks focusing on that, and maybe investing time in that, I think would be a real benefit to the industry.
I'm just curious with, like, the EU data privacy laws. You're talking about the value in data, in what might come in the U.S. that might reach a similar level. Does that impact how you think about those sort of investments?
Yeah, good question. Because I split my time on both sides of the pond, but yeah, it does. I mean, I think obviously I probably caveat this as all of it depends on which jurisdiction you're operating in and domiciled in and so forth. But yes, the obvious answer is yes. I'm taking a more maybe American or biased centric view, but if there's folks abroad on this or listening to this after the fact, I think, yeah, you absolutely have to, right? You absolutely have to. I think the biggest problem in the EU is just the slowness, right, of regulatory adoption there. But yeah.
Anything else before we segue over to the Q&A, Joe? Anything else you want to touch on?
No, I mean, I think we covered a lot. I mean, this has been a fantastic conversation and a great question.
All right, great. So I'll, again, anyone who'd like to put their questions into something either in the chat or the Q&A, we'll monitor both here. Let's see, a new question has been asked. There we go. Do you expect AI to accelerate direct-to-business distribution, or will intermediaries remain central?
Great question. I think that for the most commoditized business, I can envision a world AI, AGI driven here that a lot of that could be straight through processed or driven by AI or self-serve. And I think even younger generations are preferring to almost self-serve. Now, I think there is a question of, how AI is it versus, how human-like is it? But voice is becoming very, very good. And again, for more simplified, commoditized, or even kind of post-buying servicing tasks, a lot can be driven by AI. I think humans still will appreciate the concierge approach. But intermediaries, 10 years ago when there was the first, I'll call it InsurTech 1.0 or so forth, a lot of folks are going direct. We're getting rid of retail brokers. wholesale brokers and so forth. Well, that clearly didn't happen. I don't see the broker channel going away or intermediary channel going away. But I do see being it augmented for sure. And maybe some of the more simplified or rote items will go kind of completely AI centric.
Okay. Other questions from folks? We have a few minutes left. Still have a lot of people on, so any others? Last call. Oh, here we go. Do you see big players such as OpenAI, Google, Grok, etc., to now be the main competitors, and how are you evaluating startups?
It's a really good question. So I thought about this a lot, especially in terms of like ingestion, right? And with a lot of the AI agents that are developing in OpenAI or Claude or Gemini or whatever. I think there are certain elements of insurtech categories that will be completely, valueless in a very short time because of the evolution of OpenAI. And I think I'm answering that question there, or others where there will be so much that can be done through developing your own and self-service that, why would you go pay a vendor to do it if you can do it fairly quickly yourself and customized to your business use case. So I do see them as the legitimate competitor to a swath of insurtech. That being said, I think that kind of evolves investable insurtech into different angles that are more industry specific or domain specific. And I go back to kind of the example used at the top of this conversation of are there folks doing kind of end-to-end underwriting, work desk, aggregate management, and policy lifecycle all in one platform. To me, that that solves a challenge or a problem for somebody. I think there's definitely elements there. Same on the claim side, right? Getting very kind of granular, whether it be personal or commercial claims, whether it be auto or property. There'll be some interesting insurtechs that certainly become more interesting and investable from there.
I had just assumed that these big players were going to, see where the activity is and then create vertical solutions on top of that. But it seems like their commitments are so great just to maintain their horizontal deliverables that maybe it's going to take
True. That's true. I mean, there's always been rumbling of subsidies for them already, right? And is there enough financing? And I think we're all limited by compute at the moment, and probably more importantly, electricity generation to power this all. But I'd say it's kind of maybe a closing thought from my end. I mean, I think companies that will win here over the months and years to come, don't necessarily need to be the most sophisticated technology ones, Josh. I think they're the ones that can learn and not be afraid of AI and how they can deploy. And maybe it's not the perfect solution day one, right? Maybe it's iterative over time. But I think understanding that AI, in my view, is going to be an augmenter, a capability multiplier. That in of itself isn't a strategy. But if you can use it and deploy it in kind of your proprietary either sales niche or your proprietary data capture or your strategy, I think that is definitely one way of seeing AI really create value in your organization. And if I was to leave that as a takeaway, I think it would be that.
Okay, great. I know you have something at the top of the hour. You have time for a couple more questions? Or
I have a couple. Yeah, I've got 7 more minutes. Yeah,
okay,
for sure.
All right, because they're piling in here. Well, while we were just on the topic, I'm going to take this one. So there was a question about Google's new cat modeling ability, and will that supplant the incumbents who are providing this info?
Oh, I'm not aware of your Google. I mean, I did high level. I haven't spent any time, so I fortunately can't answer that question.
Right. This one, someone, and there may be a few people who this would help, but they're asking, what did you mean by vision earlier? Is something you're expecting growth in?
Oh, so I mean, in terms of, yeah, so more in terms of photography, right?
Yeah.
And, that's what I meant by vision,
So,
right?
so yeah. So the
Video capture, right?
reverse of
Photography.
Nano Banana's ability to take text and turn it into images. You're talking about taking images and turning it
To text or tangible, yeah, right, example, right? Do I have a camera on something that, yeah, actually gives me kind of true underwriting insight over time, right? Not just, post, but actually proactive.
Yeah. Okay. If you were launching a new MGA today, which AI capabilities would be non-negotiable from day one?
Really good question. So I go back to the fundamental piece of how much data can be capturing, both on exposure and experience information, and how am I using that data to augment either my underwriting, my claims capabilities, or my servicing, right? And gleaning insights from my distribution. So to me, it would be having that AI capability that ensures that we got the most robust and dynamic data lake and that foundational data layer. That to me is paramount.
Okay. I don't know if you'd be comfortable opining on this one, but given the high cost of power consumption, cooling, water requirements, chips, cost of massive data centers, is AI sustainable in the long run?
Really good question. So read a lot, about that, right? Especially from the investor community and so forth. Humans are immensely creative. And I think the question comes down to our willingness to utilize, at least to my knowledge, nuclear and, solar and other forms beyond just, fossil fuels, right? To power. But, at the end of the day, it still takes time to bring on, generation, electricity generation capabilities. And, my gut says there probably is a point where we do plateau for a while on that until that catches up, unless, somebody comes up with some unique way to accelerate that faster. But I do see that as probably plateauing this a little bit for a while. And then we probably ramp back up. Again, that's just my personal opinion. And certainly there are countries that are very far ahead in terms of electricity and cost of electricity generation. Brazil and Spain come top of mind, and certainly China's made immense investments in that. So I do think that's going to be a big determinant in just general AI race.
Are there any insights you would have from 20, 25, 30 years ago when that whole data center infrastructure fiber investment cycle blew up and then dropped down as kind of post Y2K in terms of where we might be headed here with the growth of all this technology to power AI and what might come after that? Or is that not really something you can really
yeah, probably not really. I mean, I've been in the business for over 23 years, but that was kind of at the start of my career and a little bit before, right? And it was certainly seeing Y2K and the go-go's in the 90s and 2000. I think is the fundamentally different, right? AI versus the internet and so forth. Look, I think AI is definitely, this podcast I recently listened to. I do think it is kind of that final technology leap, right? In a lot of ways, where, I think the internet was really more about powering, communication and connectivity and a lot of different things that our modern world is today. But, AI is definitely a whole nother animal.
Yeah. All right, great. Well, Joe, really appreciate it. KT, I don't know if you're there and can just bring the slide with our contact info up, but Joe, really appreciate you taking the time.
Oh, thank you, Josh. I appreciate it. It's been a wonderful conversation.
And, if people, I don't know, I know you're busy. If people do maybe have follow-up questions or anything,
They can reach out anytime. I always try to make myself immensely accessible. Feel free to connect with me on LinkedIn. I try to write consistently on Tuesdays and post some goofy videos. But also I have my Calendly as well. And yeah, feel free to reach out, and would love to connect if people have questions or want to riff on something anytime. Thank you.
No, I appreciate the content you put out recently. You've been putting out a lot of good stuff, so thanks for that. All right, so that's our contact info again, insurtechassociation.org, info@insurtechassociation.org if you want to email us. But, and we'll have a whole new site up shortly that highlights a lot of things that I talked about earlier. So thanks everyone for joining and participating actively in the conversation, and keep an eye out for our next session that'll be coming up in a few weeks. All right, take care everyone. Best for 2026.
Thank you.